Welcome back to Only Stocks. Look, I get it. The market's a trip right now and everything is super bullish. One day you're up, the next you're up some more, but everyone's searching for that one stock that's going to 10x their portfolio. And if you've been anywhere on StockTwits or the WSB subreddits lately, you've probably seen a little ticker that's been making some serious noise. RGTI, Rigetti Computing. This isn't your boring boomer blue chip. This is a quantum computing stock. It sounds like something straight out of a sci-fi movie. And honestly, the price action has been just as wild. But here's the thing. Is this the next big tech moonshot? Or is it a high-risk gamble that's going to turn your portfolio into a black hole? Today, we're diving deep. We're breaking down what Rigetti actually does, who their competition is, and what the future might look like for this crazy volatile stock. All right, let's get one thing straight. You don't need to be a physicist to understand the basics here. Think of a regular computer like a light switch. It's either on or off, a 1 or a 0. That's a bit. A quantum computer, it's like a light switch that can be on, off, and everything in between at the same time. That's a qubit. This allows them to solve problems that would take a traditional supercomputer thousands of years. So where does Rigetti come in? They're one of the players in this new frontier. They build quantum processors, the actual hardware, and also develop the software to run on them. Their big pitch is making quantum computing accessible through the cloud. Kind of like Amazon Web Services, AWS, but for quantum. They call it the Quantum Cloud Services Platform. Their tech is built on superconducting circuits, which is just a fancy way of saying they use materials that have zero resistance to electricity, but only when they're super, super cold. Okay, so that's the tech. Now let's get to why everyone's losing their minds over this stock. There are three big reasons for the hype: the SPACs and the volatility. RGTI went public via a SPAC, which is a shell company. This often leads to massive volatility and a big run-up, followed by a crash. But for retail traders, that crash can present a bottom to buy in, hoping for the next big spike. It's like a reset button for a new bull run. Government contracts and partnerships. This is huge. Rigetti isn't just a startup tinkering in a garage. They've landed some major government contracts, including with the US government, for national security applications. They've also partnered with some big names like NVIDIA. These contracts and partnerships lend a ton of credibility to their technology. The AI halo effect. Quantum computing is often lumped in with artificial intelligence, and rightly so. As companies race to develop more powerful AI models, the computational demands are skyrocketing. Quantum computing is seen as a potential long-term solution to these problems. Since AI is the hottest theme right now, any company with a link to it gets a serious pump. Let's pump the brakes a bit. For every 10 bagger story, there are 100 that go to zero. And with a stock like RGTI, you have to be honest about the risks. Massive competition. This isn't a two-player race. Big dogs like IBM, Google, and Microsoft are pouring billions of dollars into their own quantum computing projects. They have virtually unlimited resources. A small company like Rigetti is playing David against a bunch of Goliaths. The vaporware problem. Quantum computing is still in its infancy. For a lot of these companies, the tech is not yet commercially viable for most businesses. It's a promise of the future rather than a product for today. That makes it incredibly difficult to value the company. We're investing in an idea, not a profitable revenue-generating machine yet. Dilution and cash. Burn. As a pre-profit company, Rigetti is constantly raising money to fund its R&D. They do this by issuing new shares, which dilutes the value of existing shares. And they're burning through cash like it's a mixtape in a fireplace. This is a massive red flag for long-term investors. So with all that said, what's the move? Let's be real. This isn't a retirement stock. It's not something you buy and forget about for 30 years. This is a speculative place. So if you're thinking about jumping in, here's my mindset. Small position size. Only invest what you're willing to lose. Seriously, this is high risk, high reward. A small position size means you can participate in the upside without risking your entire account. Set your entry and exit points. Don't chase the green candles. If you're looking to buy in, wait for a pullback. And if you get a 50% or 100% gain, don't be afraid to take some profits off the table. As a wise man once said, nobody ever went broke taking profits. Stay informed. Keep an eye on news about new government contracts, technological breakthroughs, and most importantly, their cash position and any plans for future stock offerings. The game can change on a dime with stocks like this. Let's really unpack that high risk label though. It's easy to say, but what does it actually mean for a company like Rigetti? Well, for starters, it means we're dealing with a company that's still in the pre-revenue stage. They're not making money yet. In fact, they're burning through cash like a bonfire on a cold night. And that's not necessarily a bad thing, as long as they're using that cash to build something truly revolutionary. But it does mean that the clock is ticking. They need to deliver on their promises before the money runs out. So, what are those promises? Well, the big one is a commercially viable quantum computer, and that's where things get tricky. The technology is still so new that we're not even sure what the winning approach will be. Rigetti is betting on their superconducting circuit-based system, but there are other companies and even some academic institutions that are exploring different avenues. It's a bit like the early days of the internet, where you had a bunch of different protocols and technologies all vying for supremacy. Eventually, one or two of them became the standard, and the rest faded into obscurity. The risk with Rigetti is that they could end up on the wrong side of that technological divide. But let's say they do have the right approach. Let's say their tech is the one that's going to change the world. They still have to contend with the behemoths of the tech industry. I'm talking about Google, IBM, Microsoft. These are companies with a market cap larger than the GDP of some small countries. And they're all pouring billions of dollars into their own quantum computing research. Rigetti, as a much smaller company, is essentially a David in a land of Goliaths. Can they really compete? Well, that's where the speculative bet part comes in. The bulls will tell you that Rigetti's agility and focus give them an edge. They're not a massive corporation with a dozen different priorities. They're a pure play quantum computing company, and that singular focus could be their secret weapon. They can move faster, take more risks, and potentially out-innovate the big guys. And if they do, the payoff could be astronomical. We're talking about a company that could be worth hundreds of billions of dollars one day. That's the kind of potential that gets investors excited, and that's why you're seeing so much buzz around RGTI. But the bears will tell you that the odds are stacked against them. They'll point to the cash burn, the competition, and the technological uncertainty. They'll say that Rigetti is a long shot, a lottery ticket, and that for every one of these speculative plays that hits it big, there are 100 that go to zero. And they're not wrong. The risk is real. So what's my personal take on all of this? I'm not going to tell you to buy or sell. That's not my style. But I will tell you how I'm thinking about it. For me, a stock like RGTI is a satellite holding. It's not the core of my portfolio. It's not the safe, reliable blue chip that's going to pay my bills in retirement. It's a small, calculated bet on the future. It's a way to get some exposure to the quantum computing revolution without risking my entire financial future. And if it goes to zero, it won't be a catastrophic loss. But if it hits, it could be a life-changing gain. And that's the key, right? It's all about managing your risk. It's about understanding what you're investing in and why. It's about not getting caught up in the hype and making emotional decisions. It's about doing your own research and coming to your own conclusions. So do your homework. Read the company's SEC filings. Listen to their conference calls. Follow the news and see what the experts are saying. And most importantly, be honest with yourself about your own risk tolerance. Are you a high risk, high reward kind of investor? Or are you more of a slow and steady wins the race kind of person? There's no right or wrong answer. It's all about what's right for you. And remember, this is a long-term game. Quantum computing isn't going to change the world overnight. It's going to take years, maybe even decades. So if you are going to invest in a company like Rigetti, you need to be patient. You need to be willing to ride out the ups and downs. You need to have a long-term vision. Final word of advice. This video is for entertainment and educational purposes only. I'm not a financial advisor. This is not financial advice. Your boy is just an investor sharing his thoughts on the market. Always do your own due diligence before making any investment.